Pembangunan Seminar, today co-hosted with LPEM FEB UI. It's a special seminar. Maybe you will allow me to give a little bit of flashback on FKP, also to introduce Forum Kajian Pembangunan to everyone who has joined for the first time. FKP was initiated by LPEM, Faculty of Economics and Business UI, and Indonesia Project in 2009. At that time, LPEM had a seminar series in the afternoon, Seminar Sore Hari. I don't know if any of you have attended that back then. So at the time, Pak Budi Reso Sudarmo, head of ANU Indonesia Project, suggested to Arianto Patundru, head of LPEM at that time, that the seminars, the hari is open to the public. So, and that was the beginning of FKP, which was hosted at LPM in Salemba, and we announced widely so that the public can attend. In 2010, FKP started its current format of a rolling host every month, such as this month, it's co-hosted by LPEM and also by Faculty of Economics, Universitas Sriwijaya. So this year, 2025, we celebrate 15 years of FKP. This year, there are 18 institutions that host FKP. And in August, we will have a special FKP also co-hosted with LPM. So we will announce that information throughout our media, social media and mailing list shortly by July, I think. So thank you again for your support and thank you for attending FKP, and we hope it will continue to be a source of information and evidence-based research and policy for everyone. Today's FKP, again, as mentioned, is co-hosted by LPM and will be chaired by Irfan Adityo, who is a researcher at LPM. So I give the Zoom room to Irfan to chair the session.
Thank you, Ms. Lydia, for such an inspiring opening. So please let me to welcome the audience. Good afternoon, everyone. It's a pleasure, everyone, to welcome you all to our webinar session today, which we will discuss on one of the most ambitious and thought-provoking economic goals for Indonesia, that is to achieve an 8% growth rate. As we have maybe already informed, our current president, Prabowo Subianto, is very ambitious about his plan to achieve an 8% growth rate during his administration. But how feasible it is to achieve? That's what we want to discuss today. We want to try to critically examine Indonesia's 8% growth target through a multi-pronged analytical lens, such as time series filtering techniques and other techniques as well. And then learning from these examinations, this study and presentation then will provide examinations on how Indonesia could reach 8% and provide a judgment whether it is actually feasible to achieve. But I won't be alone in discussing this topic. We will please welcome not only my colleague, but also an economist and a researcher at the Institute of Social and Economic Research, our two brilliant presenters, Mr. Mervin and Mr. Alif.
Good to meet with you all.
Hi, Kak.
Okay, so first of all, so the presentation, it will be the flow of the presentation is that the Mervin and Alif will present their papers and also maybe put some of the results as well, methods as well. But for the audience, you feel free to, if you have any questions, feel free to note them down in the Q&A box, and then we also will have the Q&A session at the end of the session, which you will have an opportunity to raise questions directly to the presenters. Okay, so without further ado, the floor is yours, Mervin and Alif. Maybe you want to take turns during the presentations, or whether you will switch.
Yeah, we'll take turns. It's fine.
Okay,
Let's
Okay,
wait
please
for
go
the
ahead.
presentation to be shared first. Okay, greetings everyone. My name is Mervin, and with me, Alif. We're currently in the middle of a work in progress talking about Indonesia's ambitious target, which is 8%. And we're also discussing this with Pak Jahan, our Vice Director of Research. But the essence of this FKP today is talking about whether this target is quite feasible or it's too ambitious for us to have as a target. Next. So in this specific presentation, we'll be talking first, why 8%? Why does this government decide that 8% is the way to go? And what would it be, or what it would take to get this 8%? We begin in a story of history, which is some of the narratives is that 8% is something that has been done before. And the question would be, can we try to replicate it at least towards the future generations to come? And we should talk about whether this is applicable based on those experiences. And then we talk about whether this is applicable in current situation. Then we measure as well the potential growth. How do we try to make sure that this growth is feasible? By utilizing the concept of potential growth. And we'll talk about it more in the presentation, but essentially we have some methods regarding that, which is univariate and multivariate filtering. Then we also talk about whether economic growth can be made by several growth drivers, which first can be done by decomposing GDP into production function. So we analyze whether we have that total factor productivity, and then capital, and then labor. While on the other hand, we can also talk about whether the sector of consumption, investment, government, and exports, imports, which one can shape growth, and whether it would be feasible for us to get that 8% target up and running based on our current analysis of several simulations. So first, we talk about whether 8% is quite feasible in the sense that we know the trend, we know the current growth trajectory, and whether the potential growth shows that the number is 8%. Then if the government were to engage in several scenarios which tries to push the limit and try to get for it to be 8%, would it be feasible and would it be sustainable? That's what we're going to talk about in framework of schemes and also ways of 8%, either using government spending or investment and ICOR as well. And we will also conclude this by discussing why is it very difficult to try to analyze 8% growth target, and why is it impossible in practice? Probably it's unimaginable. How do we try to engage with this? But I think as you will all see in this presentation, it will all be a matter of fact that we now know that 8% is very hard to achieve. Next. Why 8%? They say that it's about middle income trap. So if you were to engage in 2045 target of a high income country, they said that you should try to achieve the growth target of 8% because otherwise you'll get the middle income trap. So you should try to find out how to get that additional nominal GDP of 13,000 trillion rupiahs, or at least 2,600 trillion rupiahs per year. And at first on the drafts, I think you have already seen this in the media already. We have Prabowonomics by Dirga Yuza, one of Prabowo's closest aide, which says that 8% can be achieved in third year, which I think is revised in the Bappenas RPJMN. So now it's 7.5%. And we will also show why this won't differ too much regarding the ambition. And they said that it's either government investment or business investment, which we're going to try to analyze in the next slides. Next. But essentially, the narrative from their side is that Indonesia has done 8% before, which is, we can see specifically in this 5 years. So we're going to trace back history, and we see that 1968, 73, 77, 80, 1995, that is the specific years that we get more than 8%. But as we see, you can also read this as I am. Essentially, 68 is a low base effect. So you went from old order, which is a very bad economic management, and you go into new order. I think if you're an economist and you know that if we move on from the very low part of the economy towards the higher part, because the base is just so low, we get a high economic growth. So we don't think it's replicable towards the current situation. While in 1973, 77, and 80, all of those three is about oil booms. So because Indonesia is the main exporting country back then, it was the case that those oil booms, which causes the price of oil to go up, that gains will be translated into economic growth. So 73, 77, 80, we don't think it's the replicable case in the current situation. The only unique case is 1995, because 1995 is about policy reform. So it's industrialization in that sense. Around 1/3 of GDP is already industrial output with deregulations, but as we can see, it has lingering fragilities. So we have partial reforms and a very weak financial oversight, which is exposed by 97, 98 crisis. So what can we learn from this? Next. Essentially, most of those cases are commodity booms or a specific policy reform, which is episodic, but those periods were brief. So it has its own elevated macro financial risk. And if the industrialization were to happen back then, it should still be sustainable after the crisis. But I think based on that specific case, it's too much state-led, and there's already institutional gaps, for example, the cronyism of ICOR. So it is unlikely to repeat past booms, and there are very many core vulnerabilities which are still not addressed during those days. So without broad-based reforms, we don't think these episodes will still be replicable to Indonesia's case now. Next. We see historical growth, and we see that based on history, 8% is unlikely to be done again if we only replicate what's done in the past, because either it's commodity boom or it's a policy reform which is unsustainable, and probably it won't be a matter of time where we tried those cases and it will fail once again because of our unsustainable institutional gaps. I think most use case in terms of analyzing what are economic growth on the case of long-term drivers. So it's mostly fundamentals without analyzing shocks now and then, because in the sense, economic growth is not only based on long-term, but it's also based on short-term. It reflects how utilization of the employment, utilization of the factories. So it's quite fluctuative. And if you were to achieve those cases, you need to look at the long term, and potential growth shows that. Potential growth shows that how much the rate of expansion of economy can sustain at full capacity and employment. And why is this a good matter of feasibility for the growth target? Because if we were to try to achieve the target of much above potential growth, it will probably in the near term intensify inflationary pressures or heighten financial vulnerabilities. And how do we try to measure those potential growth? There are several methods based on, for example, Tillich-Selig from the World Bank. We have production function, time series filters, or long-term growth expectations. But essentially, potential growth tries to analyze the long-term economic growth, assuming full employment and full capacity utilization. Next. So first up, we have time series filtering. We have univariate, so we only use GDP data series, which is statistical techniques to decompose output into trend and cyclical components, as I've said before. And there are some approaches in that. And in another case, we have also the multivariate way of analyzing those, which is essentially the same as univariate, but we add structure of economic structure into it. So as we see on the right column, we have that univariate filter, which is not only based on degree of smoothing, lead and lag windows, which we usually use in HP filters, and we also use somewhere else like Butterworth, Baxter King, Cristiano, Fitzgerald. Essentially, those are statistical techniques just try to decompose cyclical and trend. But if you were to use UCM, we analyze it based on Kalman filter, usually used in macro, and we add structure into it, which is first the relationship between potential growth and output gaps, Phillips curve on inflation output gap, and Okun's law on unemployment and output gap, just to try to richen the numbers which is produced by those filters. And the way that we do this is that we replicate multivariate approach of Blagrave et al., which is producing the simplified version using Venice et al., and we only use the data of GDP, employment, and also expected inflation. If we compare those to growth forecasts that we have right now in the WEO by IMF, as you can see on the left column, approximately we will only get 4 to 5% potential growth rather than 8%. And as we can see in the results on the next slide, it shows exactly that. When we try to make the filtering, so first the steps would be, first we forecast the GDP growth using ARIMA from approximately data back then until 2025. We use that data, we try to forecast that using ARIMA. So 2025 and 2027 is based on forecast. And after that, we use those filters, which is, there are some Christiana Fitzgerald, Hodrick Prescott, Butterworth, and Baxter and King for univariate, and the multivariate one, we use the multi-approach with unemployment inflation. We integrate into the model, which we try to use MATLAB. And essentially, we found that both methods predict potential growth to be around 4.5%. So assuming Indonesia were to have full employment and full capacity utilization, we will only reach approximately 4.5% based on the statistical measures on the potential growth. So the actual growth of 5.03% for 2024 even, it has already exceeded potential growth. And probably that's the case why the government is very, very dominant in the terms of the one who are the growth drivers during 2024 due to the government spending. And looking ahead, we can, I think, try to say that probably the potential growth would be either 4.5 or at most 5% based on these numbers. Next.
So after we look at the potential growth, we try to look more at the actual growth. We have to approach here. So the first one is production function approach. We know that this production function approach contains with the total factor productivity, capital stock, and labor to outcome the output. But here we want to decompose, we want to derive it with respect to time to see the growth of output. And then we could see that the growth of output is contained with the growth of TFP, which equals to the contribution. And then the contribution of the capital, which is the output elasticity of capital times with the growth of capital. And then the contribution of labor, which contains with the output elasticity of labor times the growth of labor. But here we assume that the constant return to scale. So if we add the output elasticity of capital and then output elasticity of labor, it will result with 1. So if we look at our history, we could see that our growth contribution is mostly by with capital. So in average, from 73 until 2022, we could look that the average of the contribution of capital is 2.73 percentage point to overall GDP. And then if we look at the elasticity of capital, we could see that the average is 0.63. It means that it higher than the labor elasticity. It's just 0.37. But if we look at labor contribution, we could see that it has peaked at 93 until 97. The contribution is 3.80 percentage point, but it declined in the last 3 periods. So in 2008 until 2012, it just 2.20 percentage point, and then from 2013 until 2017, it 2.44 percentage point, and from 2018 until 2022, it's just 0.80%. The important contribution to our GDP growth, the variable that we need to look at is the total factor productivity. Because of what? Because TFP was positive in pre-1993 up to 2.05 percentage point in 1988 until 1992. But it has shown a more contraction trend since 2008. And if we compare it with the other countries like China, Korea, Singapore, and India, we could see that they have positive growth of TFP. But our growth mostly in recent is in negative or contraction trend. But we see that if we want to reach 8% growth, we will require a substantial improvement in our TFP contribution.
Okay, so this is what's mentioned of the China and Korea, Singapore, and Thailand. But basically, after we got the numbers of potential growth amounting to approximately 4.5% to 5%, what is that? Is it possible for us to reach 8% higher, much higher than the actual growth itself? Is it possible that if we have the potential growth of, say, 5%, it's still possible for us to reach the actual growth of 8%. So that means to achieve the 2027 target of 8%, we increase approximately either 59.05% above 5.03%, or if we analyze it based on our Butterworth scenario, 67.77%. So we see back on history, which are the countries which can still make actual growth 60 or 50% above potential growth, and the potential growth rates. These are not the cases which will happen in Indonesia. Why? Because if we can see those indicators, either they have a very big capital input, very big labor input, or TFP, and we don't have those three. If we compare how these countries shape history, we will see that probably this is not the case of Indonesia, even if we try to decompose it based on TFP, capital, and labor. Next. Say China. See, China from 1960 has already gotten 10% growth. In 1963, 1964, from Great Leap Forward and famine. And they introduced modest sponsored incentives. 1978, they have market opening reforms with Deng Xiaoping, and they established special economic zones to attract FDI. And with the global integration with WTO accession in 2001, they have the export-led model, the going global strategy of the early 2000s, which drives outbound investment and tax transfer. And as we can see in the previous slide, China got 2007, 50% actual growth higher than the potential growth. But they got capital accumulation and they got total effective productivity, which is very high. In contrast to Indonesia, China has the decisive large-scale industrial policies and deep integration to global manufacturing. That is contrasting with Indonesia's commodity-driven, and it's much more decentralized approach. As we can see in South Korea on the right column, 1950s, 1960s, why do we care about all this history? Because we need to know what shapes economic growth itself based on those countries. 50s and 60s, they were built after Korean War. They shifted to export-oriented industrialization in the 1960s, and they went towards a specific sector which they tried to get an advantage compared to other countries. And the growth is more than 8% as conglomerates rose to global competitiveness. And it's not stopping there. 1980s, 1990s, they upgrade those technologies, measure deregulation, and there are continued government guidance of high-tech sectors alongside financial liberalization. Even if AFC crisis hits, they prompted swift reforms, and those rapid rebound in growth is built through institutional capacity. So it's institutional, that's the one which shapes South Korea getting much more actual growth than the potential growth. We see 2000 and 2002, the growth drivers is those three: capital accumulation, labor inputs with a very high skilled labor because they have a very advanced sectors, say semiconductors, consumer electronics, and automotive exports. Even total effective productivity is very high. And it contrasts again with Indonesia. Korea's is cohesive in industrial strategy, robust regulatory framework, and it enabled a smoother crisis response even after post-AFC, which Indonesia still has a very decentralized governance, which with a very questionable industrial policy and institutional gaps, which pose challenges. Next. What about other countries? Say Singapore. Singapore is also an anomaly because, of course, they're small, but we can also learn something from them, which is they tried from the beginning to try to make industrial policy much more coherent, much more centralized. Say from 1961, they attracted FDI not only into high-skilled manufacturing, but they tried first with labor-intensive manufacturing, which underpinned 10% growth in the 1960s, 1980s, with heavy investment in world-class infrastructure, education, public housing, which is, again, one that we should highlight here, investor-friendly environment, even since the 1960s. Probably Indonesia now have feminism, but now Singapore shows that it's the way to go to have an investor-friendly environment, because how do we get all those capital accumulation, which in 2000 and 2004 is one of the most, one of the growth drivers which made Singapore able to get actual growth much higher than the potential growth that should be happening in Singapore. Even in 1980s, they pivoted into much higher value, manufacturing products, say electronics, and also financial services, which is still they're heavily relied upon until now. India, which is not high-income countries, is also different in Indonesia. Why does India still have growth post-2000s, 2006, 10, 16? Probably because they reflect gradual shift from inward-looking towards market-oriented models. So they have liberalization and they have watershed reforms, say post the balance of prime and crisis. They spark a surge in services, say IT and business process outsourcing, which if we see the 1999 growth drivers, we still have primarily capital on that side of the economic growth. Labor input to the factor productivity, they act as a support, but one of the most essential things here is capital. If they don't have capital, they won't have that much growth. And later booms is built on surface sector dynamism with export diversification. So difference from Indonesia is they're leaning towards much more surface sectorization and human capital deepening. We see all those India citizens trying to get the best out of their education. And if we compare those specific episodes, Singapore, India, South Korea, China, based on those trajectories, we don't think that Indonesia has what it takes to try to achieve actual growth 50% higher than potential growth. We don't have the TFP, we don't have the capital, we don't have the labor. Singapore has the capital and TFP, India have the capital, China has the capital and TFP, Korea have all those three. So we don't think it's still possible, even if potential growth is approximately 4.5 to 5%, that we will get 8%. Next.
So after we use the production function approach, we want to see with the expenditure function approach. We know that the output is equal to private consumption, investment, government expenditure, export, and import. But if we want to look to see deeper in this expenditure function approach, we need to see the contribution of each of the components. So the growth of the output is equal to the contribution from the private consumption, investment, government expenditure, export, and import. But in each the components of the contribution, we could see that it equals to the ratio in the T-1, and then it times with the growth of each component. So the conclusion is that when the components share in GDP from the previous period is small, a high growth rate is required for the component to make a significant impact on total GDP growth. But if the component share in GDP is large and high enough, even a moderate growth can generate a substantial contribution to GDP growth. If we look at the historical data, we could see that the ratio of our GDP components is mostly backbone by private consumption. It's above 50%. And if we look the other components like the export and government expenditure, it's quite stable. But if we look at the import and investment, it increased from the period from 90 until 95 to 2020 until 2024. We could see that the investment ratio is 32.39%, and the import is 18.92%. But if we want to reach 8%, we need some components that could boost our GDP, right? So we choose two components that can increase our GDP to 8%. The first one is government expenditure, and then the second one is investment. But if we see the contribution of government expenditure and investment in the last 3 periods, from 2010 until 2024, we could see that the total contribution from these two components is going to down. This happened because the growth for each of these components is also slow. So if we look at the government expenditure growth, it going slow from 3.66% to 2.32% in 2020 until 2024. And then the investment growth has some trend. So it declined from 8.51% to 2.78% in 2020 until 2024. So if we want to increase our growth to 8%, we have some scenarios. So we have 3 scenarios and 4 themes. So for the themes, for the first one, I want to explain. So we have the first themes, it's the growth is realized all in government expenditure. The second will realize on investment. The third is a mix with government and investment. And the fourth is alternative one with ICOR. We want to decrease the ICOR. So this scenario, we have 3 scenarios. The first one is business as usual. So we assume that from 2024 to 2029, the contribution is still in the growth is still in 2024 growth, 5.03%. But in 8% scenarios, so we have scenarios that we could reach the 8% in 2027. We could see that we need to increase our GDP growth to 6% in 2025, and 2026, 7%, 2027, 8%. But we have additional scenarios. It's follow the RPJMN, so it will reach 8% in 2029. But in these scenarios, we have some assumption. So if fully government expenditure or investment-driven growth scenario schemes, the entire gap to reach the GDP growth is assumed to be covered by this increase of components of contribution of government expenditure and investment, while the other components like household consumption, export, and import will remain constant, and there is no crowding out effect. So the first one is the theme using the government expenditure. So we could see that if we push the GDP growth to 8% in 2027, we could see that the components of the government expenditure need to increase to 3.45 percentage point in 2027. So it concludes that from 8% growth, the 3.45% need to be done from the government expenditure component. In RPJMN scenario, we just need 2.95%. But if we see the ratio of the government expenditure, it's so small, then if we need to increase the contribution, the growth of government expenditure need to significantly higher from the business as usual scenario. So we could see that in 2027, the growth of government expenditure need to increase to 33 until to 34%. But we could sense that if the government expenditure is higher, then we need then if the revenue is still constant, so we could see that the impact or the implication is to debt to GDP and deficit to GDP. The first one in figure B is the impact to deficit to GDP. If we push this scenario to reach 8% in 2027, or we follow the RPJMN scenario, we could see that our deficit to GDP could reach 6 to 8%. It's above the 3% deficit rule by our legal threshold, the 3% legal threshold. So the other one is to debt to GDP. So if we look at the debt to GDP, we could see that in 2027, the debt to GDP will increase to 44 until 46% in a ratio of GDP. But if we want to keep the deficit to GDP below the 3%, we need to increase our revenue in our fiscal revenue to be 23.43% of GDP in 2027 in the scenario of 8% in 2027. But if we follow the RPJMN, we need to reach 16% of GDP of revenue by 2027. The other scenario is using the components of investment. So if we want to reach 8% in 2027, we need to increase our investment contribution to overall GDP to be 5.37 percentage point in the 8% in 2027 scenario. But if we follow the LPEM, we need to increase to 4.87 percentage point in 2027. The growth scenario, the growth will increase to 13 until 14% in 2027. The other scenario, the other seems is that if we want to keep the investment in constant, but if we want to still reach the 8% growth, we need to lower our ICOR. So the ICOR in business as usual is 6.81%. 6.81 in 2027. But if we want to reach 8% growth, we need the ICOR from 4.50 until 4.17. So if we summarize the scenarios, we could see in our scenario that it's hard to happen because most of the deficit to GDP is higher than 3%. Even for the business as usual scenario, the deficit to GDP in 2027 is higher than 3%, than 3%. But there is one scenario that we see that could less than 3% of deficit to GDP. It's the 8% scenario in 2027. It's just 2.97. But if you look the investment growth needed, it's higher. It's 2 times the business as usual growth. It's need to be 14.90% of growth.
So that's the numbers. When we try to force the way in getting 8%, probably what we have is either a very high deficit to GDP, which exceeds our law limit, or if we try to get that investment numbers, it probably won't be a matter of time where we try to realize that it's almost impossible to look at. So we first discuss that 8% target is quite unrealistic. So without deep reforms, it will risk macro imbalances, and we will have unrealistic investment expectations. We will recommend for Indonesia to have a much more reasonable target. At least we move towards quite pragmatic 5-6% trajectory, which aligns with historical performance and institutional strengths. And we try to avoid the pitfalls of overambitious numerical goals, which, as I will try to engage in the conclusion, it will hurt Indonesia even more if we try to force it upon the way which we set our growth target. So we can focus on productivity drivers, as we can see in those TFP, capital and labor decomposition. Essentially, what we have is how do we make sure that we are quite productive in the sense of our economy? We go back to Arthur Lewis' theory of development, which is we try to get steady gains by upgrading our sector by human capital, technological adoption, and efficient resource allocation. And don't forget that we have to try to be innovative. So we encourage continuous innovation based on institutional reforms, so we don't protect the agents which are trying to engage in all sorts of communication, even if they're not the best advantageous compared to the overall global markets. So we have to have a flexible market supported by robust institutions. And of course, we have to also ask, who are these 8% for? Is it only for the upper class? Is it for all classes? If we were to get 8%, but it's only for the ones who have that manufacturing industry, who have that mining, who have that all that powerful within those corporations, how do we ensure that that 8% growth is any beneficial for us compared to other countries? So we have to monitor institutional outcomes to ensure that those expansions benefit disadvantaged groups. And also government should try to catalyze these by not engaging in just quick wins, but just through deeply rooted reforms. Infrastructure will still continue, regulation, governance, why? To avoid those crowding out effects of private sector dynamism. If they try to engage in government spending, investment spending, probably there's not going to be any innovation around, there's not going to be any private sector not related to government, which tries to get the hold of those opportunities, and those crowding out effects will be even harder for us to sustain those debt and deficit to GDP. And also, we have to try to chase the long-term goal, adaptive, high-quality institutions, rather than chasing short-lived boom and bust episodes. Next. And we close this presentation by first try to recall what IMF explained, I think in the Article 4 of its Indonesia's report, that the government says that this is for trying to escape from middle income trap. But the IMF report says that if you were to make a nominal GNI growth rate of 8 to 9%, it only requires 6 to 7% real annual growth rate, assuming an average inflation of 2% per year, which is quite logical. So those urgency to get 8%, we don't think it's there in the first place. It's probably just a random number, which is, I think, a special number by the leader, which we have back then, but there's no one way around it. Middle income trap can still be avoided even by using 6 to 7%. So I think it's much more of a political ambition compared to economic ambition. And if we try to sum up, these are the reasons which you can try explain to others why we think it's difficult and perhaps impossible. First, we look back in history. How do we get 8%? Either by commodity booms or only one specific year, 1995, which is quite unsustainable in short-term policy reform. And then if we try to measure it by potential growth, which I think is one of the most used methods on global scale, it even shows only 4.5%, 5% at most, according to WEO report by IMF. And from production function decomposition, they lack CFP growth, in contrast with China, Korea, and Singapore, with both high capital accumulation and CFP. And even if we were to boost those government spending based on expenditure approach, it would cause high deficit to GDP, which is well above the legal threshold, even if we combine it with investment increase. This is assuming no crowding out effects. So this is still underestimated, and we think deficit to GDP will be surpassed if we were to engage in that action. If we were to go into investment-only trajectory, it will require 15% investment growth, which is twice the current trajectory that we have, or 4.17 ICOR ratio instead of current 6.61. Are we sure that we can try to diminish the ICOR ratio from 6.61 to 4.17 in less than 5 years? We don't think it's the case. And if we were to keep the deficit to GDP ratio below the legal threshold, as they say, by trying to raise the revenue needed for the government to have that specific scenario with sustainable debt, it should be the case that our tax to GDP ratio must grow to 23% of GDP by 2027, which means we must grow 71%. Even now, we try to raise from 10% to 12%. It's very hard. So we don't think 23% is feasible. And then Antara, the one that's called the next growth drivers of our 8%, if we try to measure it based on planned investment from SOE's dividend flows, I think 140 trillion, it only covers 63% of needs in 2025, 19% in 2026, and 9% in 2027.
Hello? Olive, can you hear me? Really?
Yeah, wait.
Yeah, I think there's a technical issues with Mervin's connection. I'm sorry for
Yeah.
the audience. We're experiencing technical issues with the one of our presenters. Miss Lydia, is it okay if you wait for Mervin to come back?
Yeah, sure. I think we should wait and also maybe ask if he can repeat from where he left us.
Sure, thank you.
Yes, sorry, where was I? So I think the last is about deficit to GDP ratio and also investment from SOE dividend. And I think one of the cases why I lost connection is also because our infrastructure is pretty not very good in terms of investment. So then again, 8% is very hard. So I think that's the way to end the show. Thank you very much. I return it to Irvan. Sorry for the delay. Thank you.
Okay, cheers and well done, Mervin and Olive. Okay, can we give a round of applause for both of our presenters? Thank you. All right, okay. So before continuing, I would like to remind unmute you, and then you can ask your question directly to both of our presenters. Okay, let me briefly look at my Q&A box. We already have a few questions there. Okay. The first question is that there is a question from Miss Ginting. Thank you for the question. So the question is that, if I'm not mistaken, you mentioned that labor is not the driver of growth in Indonesia. Can you please elaborate further? And also, how can it be more of a driver of growth? And then there is also some suggestions for your next presentation, Mervin. Miss Ginning or Mr. Ginning mentioned that maybe the graphs could be a little bit bigger because it's hard to see online. Thank you. You can answer them maybe.
Okay, thank you for the question. I think for the question from Teddy Ginting, it's based on first, drivers of growth is very much specific based on how do we decompose the GDP. And if we were to say that it's based on capital, labor, and CFP decomposition, it's basically a Cobb-Douglas way of decomposing. So if you remember the solo growth trajectory, essentially if you were to engage in economic growth, we can measure either by A, K, and L. And if we were to try to get a hold of the data, you can also try to find it in Asian Productivity Database, I think APO. We will get the data specifically how much is CFP contributing to the growth, how much capital is contributing to the growth, and how much is labor contributing to the growth. And labor is not driver of growth in Indonesia because most of the case it's capital accumulation. So if you see based on the slides that I think should be already right in the Bitly, but if you're not, we can try to give you essentially based on that graph on the capital and labor decomposition, capital is much more dominant in that sense. And if we try to make it a driver of growth, essentially what we try to get is labor productivity. So for example, if we try to find out, say, Korea, yeah, sorry. Next. Yep. If you see in the leftmost graph, we see that the capital contribution is very high while the labor contribution is pretty low. So that's the example of why labor is not driver of growth in Indonesia. But if we compare to those, next slide, we see that labor input growth is happening, say, in Korea, because they have high skilled labor with high labor productivity. So that's why they have a very high growth in terms of economic growth. So if we try to get it as a driver of growth, either first make the employment much more quality based, which makes the way for us to get a much higher labor growth based on the decomposition by solo. And if it's not, we can try to go further into other channels as well. So it's either labor or either capital or either TFP. As long as it's high, it's still very much feasible that we have high growth. But I think most of the cases of which we have a very rapid growth of actual growth, it's mostly based on TFP and capital. Okay. And then the next question, what is it, Irfan?
Okay, we're moving forward to next question. So the next question is from Nurvianto Giar Pangidong. How is the consideration of future government political will be related to scenarios that have been made?
I think the government is trying to right now the government try to follow their PJMN approach, which I showed before. Wait. So right now, I think the government follow the approach in 8% in 2029, RPJMN 2025 until 2029. So I think the government choose the seems to rely on the investment part, because we know that right now the government showed that they will increase the investment part via Danantara, but we have calculate the dividend per year for Danantara, and it's not enough to increase our GDP to 8%. So, right, like Melvin said, that in 2025 itself, it's just 63.82% from the investment needed for to reach the X% scenario in 2025, and 2026 is just cover 19%, and 2027 it just cover 9%. So we think that the dividend from the SOE, it's just 140 trillion. It's flow every year. We think that it's not really possible to boost our growth. Maybe Melvin, if have.
Yeah, and also there's a probability that will change as time goes due to the revisions and all that. So I think on the baseline scenario following the RPGMN, it's still pretty enough, because if we try to engage in other political dynamics, it's still unpredictable, since I think almost every program that we have in this program is unpredictable. So I don't think it's wise to add that to their scenarios. Thank you.
Okay. Moving on. Before we move on, sorry, Miss Lydia, we are also live on YouTube, right? Do we have any questions from the forums or chats in the YouTube?
Not yet, thanks.
Not yet. Okay, so we can move on from the Q&A box. This next question I think is very interesting. So you both are quite pessimistic about Indonesia's ability to improve the productivity. You also, I mean, in your presentations, you also mentioned that the TFP growth is declining along maybe 30 years. Then what is the most feasible way to increase the TFP, and to what extent do you think?
Okay, so I think it's the million-dollar question. I think there's a lot of research regarding this specific context, but based on the historical evidence that we have, most of it is about technological adoption and also try to engage in high-skilled labor force. So essentially, if you were to engage in high-skilled labor force and also technological adoption, it will try to measure what's not considered in capital and labor itself, say like the quality of the capital and also the quality of the labor itself. So it's pretty general, but I think Indonesia's ability to improve CFP is primarily based on reforms based on that scenario. So I think one of the interesting cases would be in the sense of Romer. I think they have endogenous growth theory, which tries to develop this sense that TFP is also grown within. And I think it's mostly based on innovation, so research and development. Why is it not considered in the model? Because I think it's pretty long-term first. And then the second, if we were to try to say something about the innovation in Indonesia, I think based on preliminary data, our R&D is very low, and we only produce products which are, I think, easily duplicable by other countries. So CFP is quite tricky in that sense.
Okay, Alif, do you have any more remarks to add to Mervin's?
No, I think it's enough.
Okay, so thank you for the question. We're moving on to the next question. So this one is also pretty interesting. So Mr. Budireso asked about the stories of East Asian tigers in 1970 till 1990 is mostly based on investment and labor. Productivity is not the main one. So why does that situation can't be applied in Indonesia's current context? Maybe Alif or Mervin can take that one.
Yes, in that specific sense, the question is whether investment is still possible to be received from our current situation. And if we were to say we get enough labor with high-skilled labor, I think it's mostly based on long-term reforms. So if Asian tigers in 1970s and 1990s get the investment and labor, it's only possible because they have a specific structured industrial policy, which I don't think we have right now. And if we were to try to make sure that the labor productivity is high enough based on the high-skilled labor we have, I don't think it's pretty much the case to get based on only 8% target in the next 5 years. It should be the case that we have also a very much long-term industrial policy. So even if probably productivity is not the main one, it's still the case that if we were to engage in investment and labor, which is capital and labor, it's still not enough time to make sure that we have what it takes to first get capital, because investments is pretty hard to get these days because of the challenges based on other neighboring countries. While in labor, it needs a very much higher education, try to make sure that it fits with our current labor productivity situation. I think that's the current state in our view or perspective. Any addition, Alif?
No, I think it's enough, Mervin.
Okay, so again, before we continue, I want to check whether we have questions live, or maybe someone wants to raise their hand and ask the questions directly to the speakers. Okay, so we're moving on from the questions from the audience using the Q&A box. So the next question is that whether this is a really topic, you know, there's a lot of people talking about, does MKM or informal sector truly matters? You know that they cover like most, maybe 99% of our economy, right?
So it matters because first, informal sector is very hard to ensure that they have a formal employment first. So if you were to engage in some sort of industrial policy, which is say, we'll get much higher CFP compared to a very small scale based production, it will be the sense that we should try to make the sector more formalized. Because if we were to engage in some sort of industrial policy, which has a very high productivity, you have to ensure that the sectors itself will attract a high skilled labor in its own, and it's only possible if it's formal.
Okay. Alif, do you have more remarks to add to Mervin's remark? Maybe?
No, I don't have that.
And probably
Okay.
just to add, it's not explaining that OMKM is useless. No, but the sense that if you were to engage in OMKM as one of the high growth drivers, they should have specific high value products as well. So those OMKM have competitive advantage, say boutique shops or others, like we have in those European countries compared to what we have right now, which is OMKM is done not based on their entrepreneurship, but because they don't have any other choice. So while we should have a formalized sector, but it doesn't mean that we have to reduce OMKM. We can have a formal OMKM as well. Next.
Okay. So the next question is, I think, pretty much very related to the previous question. So this is a question from Sultan Kasim. So assuming Indonesia were to achieve full employment, whether this year or next, despite it being highly unlikely, would the country realistically be able to sustain GDP growth of 5 to 6%, considering its persistently low labor productivity? And then what have been the government's policies or contributions towards increasing employment, which this is especially critical in light of the growing uncertainties in the labor market, such as the mass contract terminations across various industries and the unresolved status of the 2024 civil servant recruitment, which many of whom have yet to be officially engaged or employed.
Again, I think you're asking with the wrong team here because again, we don't think it's very realistic based on that says. I think you specifically perfectly summarized what's been going around. And while I think government has tried to do some specific reforms, say like to cushion those circumstances, but I don't think they already addressed the big issues that's happening with the labor productivity. So if would the country realistically be able to sustain GDP growth considering its persistently low labor productivity, assuming the government doesn't have any change in terms of reforms regarding this specific labor situation? I don't think that's the case. So unfortunately, your answer is true.
All right. Okay, moving on. So this next question is again about the manufacturing sectors. So Teguh Muhammad Akbar asked question, with the growth of manufacturing sectors in Indonesia is still lagging, far behind China or developed countries like Japan and South Korea. What must the government do to stimulate the Indonesian entrepreneurs to make or build more manufacturing companies or attract foreign direct investment to invest more in the manufacturing sectors in Indonesia?
I think this is related to our one of our approach with our ICOR approach. So we think that if the government want to use the mix of increasing in investment and increasing the easiness of doing business in Indonesia, so it could decrease our ICOR a little bit, maybe to 5. So I think it would increase our manufacturing sectors growth, and I think the efficiency, the regulation to be the better regulation. I think it could increase the first one via increasing the investment, and then and the multiplier of the investment to GDP via the calculation of ICOR. Maybe Kamefin.
Yeah, I think it's mostly the case to ensure that it's investor friendly, because I think specifically, I think Pak Khatib also mentioned that the question of bringing in investment is just try to make sure that they can try to invest in the first place. So I think the lagging behind is mostly the case because we don't have any specific reforms in that bureaucratic sense. So if you were to attract more manufacturing companies, simple, try to cut off those bureaucratic red tapes and just try to make sure that if they are interested enough in Indonesia as a potential country, they can invest in the first place. Other than the case that I think you've all heard like BYD companies in West Java being bribed or being coerced by those I think civil or so-called civil organizations. How can they invest in the first place? So I think it's much less of an economics, but much more in towards the administrative sense, because without it, we can't be sure that they will invest in the first place.
Very nice. Yeah, I agree with you. I mean, it's not about not everything is about economics. I mean, in a sense, whether like it's also like the simplicity of the bureaucracy. It's about the whether you have the law to do business. If you're a businessman, you don't want your business to be, you have a lot of things to take care already as a businessman, right? So those things do matter. So the next question is from Andre Srianta. So do you calculate how much private investments need to grow up to make up for government shortfall? Would domestic direct investment or foreign direct investment be a more feasible source for this?
So yeah, I think we have tried to calculate how much the nominal investment needed in 2025 until 2027. We calculate that if we want to follow the RPJMN scenario in 2025, we need 61 trillion additional of the additional plus the baseline of business as usual in 2024. And then in 2026, we need additional like 300 of trillion rupiah. And then 2027, we need 1,000 trillion rupiah. But if we look at the Danantara investment, they said that the dividend flow every year is just 140 trillion. So we think that it's not enough to fill this gap in investment needed. I think that the foreign direct investment would be likely more feasible to increase our GDP because I assume that there are no crowding out effect to other our other components in the expenditure function. So I think it would increase more in our could increase more in our investment and don't bother our other components in the equation. Maybe from Evin.
Yeah, but then again, if you were to attract those FDI, as I mentioned before, you should try to make sure that those FDI is safe in the sense that it's safe to invest to Indonesia just in case that there will be any hurdles in terms of administrative or in other cases, which there will be hidden costs.
Yeah. Yeah, hidden cost actually matters, in the real settings. So moving on to the next question. This one is pretty interesting, I think. From Hardy Salim. So Hardy here mentioned that believe this work is a significant contribution to Indonesia's economic research and policy making. Thank you, Hardy. So he'd like to suggest the others could consider using more structural variables when decomposing long-run growth, such as article as young, or accounting for the level of education and the sex of labor changes, the measure of TFP of East Asian countries. This may allow to more specific reform recommendation. Well, it's not a question, but it's a suggestion. Do you have anything to add to this remark, Mervin or Alif?
Yeah, I think based on that sense, we already, I think, explored some possible extensions, say the production function itself, try to make it a cross-country regressions. But then again, the question would be whether there's some generalizable reforms or recommendations for each country. Like say, probably the one reform that's been done in, say, Korea or say in Taiwan or say in Singapore is not completely, I think, relevant towards the case of Indonesia. That's one negative side. And then the second one is that if we were to engage in some sort of like a decomposition of long run growth based on regressions of how education and sex of labor of East Asian countries, again, we will have a matter of endogeneity within those analysis. So I think this is very good for descriptive statistics, but I don't think it solves specifically whether Indonesia has that reforms that should be gotten in the first place. Like say, okay, you try to regress those TFP of East Asian countries and you found out that probably in Singapore, the sex of labor is much more gender balanced compared to Indonesia, say, but probably that's specifically because of the culture of Singapore. So probably it's not exactly relevant to Indonesia. So I think TFP, we have to try to make sure that it's, I think, multidisciplinary, because I think based on only several economic variables won't do much, because I think what matters is the structure of incentives within those economy that matters as well. Like say Indonesia, the one problem would probably not be that the employment is very tough, say, but probably it's because of, even if they have all that high skilled labor, it's the case of corporations that don't want to make R&Ds because say there's not enough support, or it will be useless because most of the cases of tenders will be given for the ones that are affiliated with the government. So I think it's a good suggestion, but I don't think it will be a very conclusive one.
Okay. Do you have something to add to Mervin's remark, Alif?
I think it's enough from my friend.
Okay. Yeah, so yeah, it's again, TFP is something, it's pretty, when maybe you all remember Economics 101, TFP is measured as a residual of when you regress it. So you really need to think about maybe outside of the economics perspective, which makes it more interesting, I think. So the next question is from Hanifa Lutfiana. What do you both think about most significant obstacle to Indonesia's economic growth when we view through the lens of ongoing US-China tensions? Maybe it's a tariff war that you're trying to mention here, and their ripple effect on global trade and investment.
I think I'll add to this one since I've recently made an article about this in 360 Info. You can also read about it. But essentially, the lens of ongoing US-China tensions is based upon whether we can get that opportunity that's been given based on these tensions. Like, okay, this ripple effect can make or break the economy, but we should try to measure it in such a way that it's not only, I think, a damaging factor to our economy, but also an opportunity. If we were to be competitive enough to try to make sure that the ones that are invested towards the US and China supply chain, like say it used to be that the supply chain is in China, but because there's tensions, they have to try to get that supply chain elsewhere. We have to get that opportunity. If we were to get that opportunity, then we can be beneficial. It can be beneficial for us to get the US-China trade tension in the first place. But I think it's getting much harder these days because first, the tariff is, I think, applicable to many countries as well, which are involved in the supply chain and trade war one. And if we were to engage, unfortunately, we have to try to diplomatically try to say what we want towards the US and China in that sense. But other than that kind of diplomatic power, we also should try to at least try to be competitive against other countries. Like, how do we make sure that we are the ones that will be selected by those companies compared to Singapore, Malaysia, and Vietnam? Because I think now it's not the case that investments is all around and that they will invest in every kind of potential, but they will be selective about it. And if you want to make sure that Indonesia got those investments, you try to make sure that we have an upper hand in those circumstances.
Okay, so if I may to add to the remark, Mervin, to maybe add more not a short question about the market you said. So you mentioned about the investments, right? Olive mentioned about our investment to capital output ratio is relatively high, so it won't really incentivize investors. And then from the legal and business perspective, you mentioned about the lack of the law reform, and then there are too many regulations, there are many hidden costs. I feel like doesn't seem as a good sign that can incentivize investors now currently. So, I mean, how possible is this scenario you're talking about the foreign investments coming to Indonesia?
Well, I think I can't stress this enough. It's not just about the tariffs, but it's also about how they structure the policy itself. So I think the question that we should ask is about whether the current government has a specific bureaucratic reform not bureaucratic reform, just simply what they can say for the foreign investors, just to make sure that they can invest in here well enough and to be safe with that investment. Because I think either it's not happening right now, or it's happening, but they don't want to show it to us due to transparency reasons. And I think one other measure of how the foreign investors is gonna be, I think, much more divisive in the sense of investments is also about stability. They want to ensure that those investments will be getting enough safety based on the political situation, based on how our stabilization matters. But I think based on the case of, say, our declining democracy, based on our freedom of speech, I think there are some indicators which shows otherwise. And I think it's not just economic indicators that's been thought after by those corporations, but also those kinds of things which will hurt themselves if they were to invest. Like, who will invest in Indonesia? Probably now it's mostly China, because I think they're quite complex enough in their own country, so they're prepared to get the complexity of Indonesia. But if we were to expand outside of China, I don't think it's the case that we be successful if we weren't to try to get a hold of those urgencies.
All right. So thank you for the answer, for answering my question, Mavrin. So for the next question is about something that has been a buzzword, maybe like for the past 6 months, with this hilirisasi, or in English, as she'll mention it as downstreaming. So will maybe propose administration lead Indonesia to the 8% growth through the downstreaming policy or industrial policy? And how should we, maybe us or general public or informed public, to need to respond to this?
I think if the question is it possible to reach 8% with the extractive industry? I think the answer is yes, because if we just care about the numbers, I think we could reach 8% with the numbers. Maybe you could increase the investment to extractive industry and get the value added, and then you get the growth. But I think we also heard that the most portfolio of Danantara will be to the extractive industry too, right? And but I think the important question is beyond the numbers. I think the important question is our growth is sustainable or not? Because maybe you get the number of 8%, but after that, what happened to our environment? What happened to our next growth? What happened to our long-term growth? I think this question is important because we don't just see it as you reach 8% and done, but you think that our growth need to be sustainable too, and it's need to be inclusive too, right? Because maybe if it's just from the exclusive industries, it's not inclusive to our society. I think it's beyond the numbers.
Yeah, and also add to that, remember that I've said some things about Indonesia's history. We have that specific scenarios or specific episodes which we are much dependent on commodity booms, but don't forget about Dutch diseases. It's not just the hilirisasi that will make a higher valued products, but I think current state is we have quite intermediaries, which I think is still very fluctuative based on supply and demand. I think specifically, for example, nickel-based prices. So just be careful if you were to engage in extractive matters. Just try to know that it's much more riskier in terms of ensuring that those growth drivers will eventually be as we thought it would be. Since if, okay, we try to hilirisasi in every sort of commodities, but what if those products that are being produced based on those hilirisasi will get a much lower demand compared to what we thought about it in the first place, and it will hurt our economy in the first place? Why not just invest in something that is much more, I think, specific and much more, I think, conclusive in terms of a higher value added, say?
Yeah, I think it's important. It's also important to remember that commodity booms won't last forever, and commodities won't last forever. So that's very well spoken. Alif and Marvin. So next question. So the next question is, we do have money. So we're moving from the investment to the government expenditure sector. So we do have money though. The oil price subsidy, or call it in Bahasa, it's BBM, which is 200 trillion this year, which, yeah, that's pretty okay. How is you allocating the subsidy will contribute more positively for growth? What do you think about this matter, Mervin and Alif?
I think the important one is the subsidy is targeted to the right person, because we know that after we give the subsidy, we hope that the subsidy will multiplier to the consumption, and we know that most of our society have the higher saving rate. So I think if you target the right person, I think the subsidy will give them space to consume the primary consumption for their, maybe it's like food or something for the primary consumption, and it's not it's not increase their saving, but they use that space from the subsidy to consume primary goods. I think the target the right person is the important one.
Just to add on that, I think Alif is a much more optimistic guy than I am. I think based on our current case, sometimes it's very hard to target. So it's unlikely to be, I think we'll get to the target that it's needed for BBM specifically. So my point is, first, it will be beneficial, since I think nowadays BBM is allocated towards the middle or upper middle class, which don't need the subsidy in the first place. So we should eliminate it and just try to allocate it to further growth. But the question is, would it be politically feasible? Because if it were to be eliminated, there won't be a matter of time where our leader won't be able to make speeches here and there. So I don't think it's much about whether this is a good or bad. I think it's absolutely good based on my trajectory or of thinking, but I think it's politically unfeasible. So we don't think it will be a very good scenario that we have.
Yeah, I think it's not only that the matter, though, it's more about the timing and who's talking about it, the political feasibility and all. Yeah, and you're absolutely spot on. So the next question, I think, is about more, we're shifting towards the government sectors now. So there is a question from Namira Dira Ramadanti, which there's a projected increase in debt to GDP and the deficit to GDP ratios under different government expenditure scenarios. What do you both takes on the government debt management to be allocated for productive activities, since we know that debt maturity in 2025 will be peak in June, even though the MIF do the front loading to pay debt with also debt. Yeah, maybe the question is more like what's your take on the debt management itself to maybe leverage growth?
Okay, first up, if we try to analyze government debt management, we have to know the specific productive activities that it's allocated. But I think from the current year, there's not any kind of sightings of APBN kita in 2025 in, I think, Kemenko's website. So first up, just to try to make sure that it's allocated for productive activities, just to try to make sure that those use is transparent for us as a people in public. And then if we were to ensure that those productive activities are taking place, it's still pretty hard to ensure that it will try to diminish our deficit or debt to GDP, because I think as long as the government still makes the case of quick win scenarios, which takes a huge amount of money because it's based not on the programs, but based on the allocated recipients, say MBG, for example, the free lunch program. If it were to still be implemented, it will be very hard to get those productive activities up and running, because it's mostly based on primary needs, right? It's not just growth in the short term. So like if you were to engage in programs, you can decide either you go into those programs like free lunch, which I think they stated will be good in the long term, but it will be pretty hard just to ensure that it will be spillover towards other productive activities rather than try to engage in companies making innovations. If you were to engage in 8% growth, I think it's better to go for it into much more productive investments, say. But I think based on the current trajectory of RPGMN, we don't think it's the case. The activities are not non-productive. It's much more towards people-based incentive mechanisms. So I don't think it's a very good one for government debt management. Something to add, Alif?
I think the important one that we need to look at from the debt management is not just the debt to GDP and deficit to GDP, because because yes, Namiran, right, because the government could pay the debt with the debt. So even if high debt maturity in 2025, the government could fill that with the other debt. But we think that we also need to look at the interest payment, so the primary balance. It's also important to us to look at how much the interest need to be paid for every year, because it's costly for our APBN expenditure, and it will cause other deficit. It cause higher deficit to GDP also.
Okay, if I can elaborate further on the question. So we're talking about the government expenditure now, which one way of financing it is through debt, which a lot of questions been asked about debts, and it's highly unpopular as well. But let's assume that firstly, as Mervin mentioned, the government is allocating the expenditures or the revenues on the productive sector. And secondly, they are actually, they're optimistic about achieving the 8%, they are committed. So what I thought is that the other avenue that the current government can do is through collecting revenue and spending and expenditure through tax, which is, they need to expand the tax, they need more tax, they need more money as well. So what are your takes on that? Because is it a possible avenue for the government, considering it's distortive, firstly, and secondly, it will be highly unpopular for the next election?
Yeah, it's possible, but I don't think it's about the tariff rate. It's about how we can try to expand the ones who pay the taxes in the first place. But first up, I think the most problematic situation we have right now is that I don't think there's enough evidences by our leaders in the government, which tries to make sure that those are the living examples of how someone should have their wealth being, I think, responsible. How can we pay taxes if we see that those leaders who are telling us to pay taxes are not responsible as well? So I think the first case is just try to make sure that all those wealth reports are being reported to the KPK and other cases as well. There's not enough corruption that we talk nowadays. So I think if you see Tanur case, you see 900 billion rupiah in cash in our government and their own homes. So before we talk about explaining how to make the tax rate increasing or how to expand those tax rates, first step that we need to do is responsibility. I think that's the case.
Well, I completely agree with you. I think about tax is not about, if you're talking about incentive mechanism, the citizens, us need to be incentivized also to, pay tax by knowing that it will be spent responsibly. So I think we've reached an end to our discussion today. I hope the audiences learn a lot about not only whether it's feasible to achieve 8% growth, it's also about sustainable growth. It's also about institutional issues, which lies maybe deeper than the numbers, actually. So yeah, I personally learned a lot. So thank you so much to both of our excellent presenters here, Mervin and Alif. Again, maybe you can give them a round of applause for last time. using your React button. And yes, and also I will say thank you very much. I say my highest gratitude to the FKP Secretariat and the ANU Indonesia project to make this discussion possible at the first place. So it's been me, Irfan. I hope you enjoyed the discussion. Thank you so much again for both of our presenters, Mervin and Alif. I'm right back to you, Miss Lydia.
Thanks again, Irfan. Thank you to speakers, and also thank you to everyone who attended today. I looked and saw that there were like more than 15 questions, so this certainly has increased interest. People are also attending. So thank you, everyone. Please look forward to our next events in June, which will be hosted by Bank Indonesia Institute and also the Semeru Research Institute. So we have 3 events being planned. Please follow FKP social media mailing list to find out about the schedules. Thanks again, everyone. See you next time. Bye. Bye, everyone.